Hello, very good morning to all, and welcome to today's daily dose of market insights. I'm glad that I'm back from my 10 days plus of leave. So, very good morning. Today will be Tuesday, the 26th of November 2024. So, before we jump straight into our gist of today's daily dose, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. Excuse me. All right. So as usual, let's kickstart with a recap of key highlights, events, and their impact on the short-term intraday performance of the broad-based cross asset classes first. All right, so yesterday let's have a review of the performance of the major US stock indices. So what we could see over here is that for those who followed our daily dose on a very frequent basis, this intraday performance of the major US indices, the four of them, the SPX, Nasdaq, Dow Jones, and the Russell 2000, shouldn't be a surprise for you guys, all right? Because even prior to the outcome of the US presidential election, I've been stressing that on this potential outperformance of the Dow Jones Industrial Average and the Russell 2000 that could play out from a multi-week to multi-month perspective has been more or less been pretty much intact and been reinforced by Trump coming back into the White House due to his policy that favored more on financial stocks and small cap stocks that are heavily weighted on the Dow Jones and the Russell 2000. So the Dow Jones and the Russell 2000 continues to outperform, reinforced by the Trump trade pertaining to the major US stock indices. The Dow Jones continued to make fresh all-time high, up by almost 1% yesterday, and the Russell 2000, after in the past 3 years, finally managed to make an intraday all-time high yesterday as well, up by 1.47%, while the Nasdaq and the SPX, both of them make minor gains but continues to underperform against the Dow Jones and the Russell 2000, reinforced by that Trump trade. And overall, in the FX market, the dollar continues to actually slide yesterday. So the dollar, after hitting close to about a high that was seen almost a year high, it actually continues to show signs of lethargic on the dollar. So the dollar index went down by negative 0.1%. So later I'll talk more about the intermarket dynamics, that why the dollar is getting weaker yesterday. And one of the reason over here is it being kind of supported by this news flow, where on late Friday over here, Trump actually nominated this very pragmatic guy, which is Scott Bassett, to be the Secretary of U.S. Treasury. And the reason over here is that Scott Bassett himself, he's a Wall Street veteran, and market view him as more of a pragmatic voice within the upcoming Trump administration, where potentially he could actually favor more economic growth policy rather than anti-economic policies like the US tariffs against the rest of the world. So that actually causes the dollar to actually weaken yesterday. But bearing in mind over here is that do not forget, economic policy in US as well as foreign policy, particularly trade relationship with the rest of the world, do not actually come from Scott Bassett himself. Potentially, if he were to become the US Secretary of Treasury, the Treasury Secretary of the United States. And do not forget, he's still pending a Congress nomination as well. And in terms of foreign policy, it got to be actually taken as a whole within the economic team in the US, the upcoming Trump administration, which is next year. So, and I want to highlight to you guys that over here, what you see over here is this. There are actually two guys to actually take note of in terms of economic policy and in terms of i.e. foreign trade policy, and as well as shaping the trade relationship with the rest of the world, is the Secretary of State, which is Trump nominated Marco Rubio. And Marco Rubio himself is a China hawk. That means he totally dislikes the way China does things, and very likely he will advocate very strong policy to detail China growth as a national secretary, national social secretary trade to the US. Okay, so he's and another guy is the national security advisor, who also have a say in terms of foreign affairs with US and the rest of the world, is Mike Weiss. So Mike Weiss himself was also a China hawk as well, and he himself see China as a greater threat to the US. So what I would say that over here is that market reaction to Scott Bessent being nominated as Secretary of uh, US Treasury Secretary got to be taken things as a pinch of salt, because he himself may not dictate the economic policy going forward. And what's surprising over here is that right in early Asia session today, Donald Trump, as usual, using his I think his social media account, highlighted that he actually votes tariffs on China, Mexico, Canada over border issue. So what he did suggest over here is that, let me highlight to you guys. He will say he will impose additional 10% tariffs on goods from China, all right, and 25 tariffs on all products for Mexico and Canada. Post in his imposed in his true social media network over here in today's early Asia session. That means late US session yesterday on Monday. So what we could see over here is that despite the fact that we have Scott Bessent being nominated as a US Secretary of Treasury, him being a more of a pragmatic person, but it doesn't deny the fact that tariffs will still be more or less be ignited in the upcoming Trump administration. Is only what is the amount going to be ignited and the speed of these implementations, and that actually causes the dollar strength to actually come back during the Asia session. And what's interesting over here is that this is the 5-day rolling performance of the US dollar against the major currency. As we're speaking right now, the dollar spike up against the Kiwi, the Euro, the Sterling, the CAD for sure, and against the Aussie, but doesn't spike out against the dollar yen over here. So this dollar yen, very interestingly, it could be part of a safe haven play, and also potentially in next month upcoming BOJ meeting, there could be a slight chance that BOJ might introduce another interest rate normalization initiative to increase the short-term Japanese rate, overnight rate, by another 25 basis point. So that was actually a kind of rhetoric that's being spewed out last week by Bank of Japan Governor Yuda. So that actually explains why the dollar yen is rather muted at this juncture, as potentially Trump tries to actually gameplay his up and coming tariffs attacks towards China and the rest of the world, that he felt that being shortchanged to the United States. All right, and another news flow I want to highlight to you all is more pertaining to the Middle East over here. So yesterday there was a report saying that Israel is actually coming closer to a ceasefire with Hezbollah. So we know that Hezbollah is Iran, together with the Gaza conflict. All these are interrelated. So actually, oil actually dropped after trading as high as the West Texas crude oil around the $70 per barrel. Can't maintain that momentum and it slipped down towards $70 per barrel. Actually, based on yesterday's price action of oil. All right, and also gold price also went down as well after spiking up last week due to this potential heightening of conflict between Ukraine and Russia, where Ukraine itself has been authorized to use long-range missiles hitting Russia target. And given that there's this cooling off of the Middle East tension, we see also Gold prices actually falling quite a bit by I think close to -2% yesterday in the US trading session. So if you, later we'll touch more on the short-term dynamics on gold XAU slash USD. All right, so these are the news flow that I want to highlight to you all that's taken shape yesterday and as well as on late Friday US session. So with that, now let me touch on more of the intermarket dynamics on the FX market. All right, so pertaining to the US Treasury. All right, so we know that over here just now I shared with you, this is the US dollar index. So the US dollar index has been rallying very strongly since its low of 27th of September. That was way before the outcome of the US presidential election on 6th of November. And after Trump being re-elected as a US president, the dollar continues to amplify its strength as represented by the dollar index. So this is the daily chart. So from 30th of from the late September, 25th of September, all the way up to its high on 22nd of November. So that was last Friday. This movement has been more or less in line with the movement of the US 10-year Treasury yield as well. Okay, the daily chart of the US 10-year Treasury yield. So 17th of September all the way up to a high of 15th of November. All right, and it peaked much earlier compared to the peak of the medium term, we call it a peak of the US dollar index. So what's interesting over here is that after a test on 18th of November at the key 4.49%, it can't did a proper breakout. And yesterday it gapped down below the 20-day moving average. And prior to this gap down, there was a bullish divergence that is being flashed out on the daily RSI, pardon me, on the 10-year US Treasury yield. So we know that this 10-year US Treasury yield has a bit of leading element. That means it bottomed up slightly ahead of the 25th of September low, medium term low on the US dollar index on the 17th of September. It also kind of slowed down its bullish movement right ahead on the slowdown in the US dollar index, which was yesterday, but on the 10-year US Treasury yield, it slowed down on the 15th of November, 5 days ahead, by struggling to break above the key level of 4.49%. And yesterday it gapped down below the 20-day moving average. And prior to the gap down, there was a bearish divergence being flashed out on the daily RSI. And right now it's actually went down below the 50 level mark, and potentially there could be some more room to it to go before hitting the oversold region. That means, i.e., the US 10-year Treasury yield could be in the midst of shaping a multi-day pullback scenario to retrace its very multi-week steep ascent from the low of 17th of September, breaking below 4.2%, potentially see the medium-term pivotal support coming in at 3.99%, which is close to the psychological level of 4%. If you do the Fibo retracement, that constitute the 61%, okay, close to the golden ratio. So what I want to try to highlight to you guys that given that the intermarket dynamics of the 10-year US Treasury yield has a close relationship with the dollar index, means i.e. US Treasury yield push up higher, 10-year US Treasury yield push up higher, it supports the movement of the US dollar strength as being represented by the US dollar index. And right now, given that the US 10-year Treasury yield is showing increasing odds of a multi-day pullback scenario towards the 3.99% level, that means that could also potentially support multi-day short-term dollar strength setback or pullback scenario that may unfold in the FX market, at least from a shorter term perspective. All right, so now let's look at the dollar index itself. Okay, so from the dollar index over here, so what we could see is very interestingly, it also starts to shape a bearish divergence as well. Notice over here on the daily RSI. Okay, and from the low of 25th of September, we could, in terms of the Elliott wave and a fractal analysis approach, we could see 1, 2, 3, 4, 5, a fifth 5-wave up. Let me put it in writing for you guys so that you guys could take a better look at it. Okay, so this is wave 1, this is wave 2, this is wave 3, This is wave 4, and this is wave 5. Right, and what's interesting over here is that the wave 5 actually came also made its one-time wave 5 target as well. If you do the FIBO extension, extending from the low of 1, push it up to the end of 3, project it from the low of 4 is the one-time FIBO target, wave 5 target, which confluencing also with the graphical resistance of that swing high of 3rd of October. Right now, we also have momentum has started to turn weak by that bearish divergence on the daily RSI. So, i.e., that could also support itself on the dollar index. Its inherent technical condition potentially advocates for a multi-day dollar strength setback or a pullback scenario that could unfold. All right. Next, near-term support level to watch will be the 20-day moving average at 105.48, which is also the pullback line of this former uh, multi-year, 1 year of range configuration now turns into a pullback support line as well. All right, this is the gray line over here at 105.48. So what I'm trying to express is that today's intermarket dynamics is actually has an increasing risk, indicating to us in terms of the movement of the US 10-year Treasury yield could potentially inflict a potential risk of a multi-day US dollar strength setback that could unfold in the FX market on the average. All right, so this is the intermarket dynamics on share with you all that is taking shape right now. All right, on the FX market. So with that, let us now deep dive into the intraday technical analysis on those broad-based cross asset classes that we tend to cover on a daily basis, starting with the FX market first. So with that, let me expand my screen so that you guys could have a better view on the chart and the key levels. All right, so starting with the FX market. Right, so let us now proceed with the euro dollar. So still recall the euro dollar before I went for my 10 days plus of break. We do have a bearish bias, and the bearish bias hit our support level at 104.10 over here. And also given that the euro dollar has has the biggest weightage inside the US dollar index. So with that, given that kind of US dollar index that's shaping the risk of the multi-day setback or pullback scenario, we will flip to a intraday bullish bias on the euro dollar for today using 1.330 as my short-term pivotal support level, which is close to last Friday minus swing low, and the fifth wave target of 0.618 as well. First near-term resistance level to watch will be 1.0520. A breakout above 1.0520 increases the probability of a minor mean reversion rebound scenario potentially unfolding in the euro dollar, with the next near-term resistance level to watch will be at 1.0610, followed by 1.0660/0680, which confluence with the downward sloping 20-day moving average. However, if the price were to actually retrace downwards or move down lower and break below with an hourly close below 1.0330, that would invalidate today's intraday bullish bias to see the continuation of the impulsive down move on the euro dollar to expose the next near-term support zone at 1.0190/1.0170. What's up for the sterling dollar? So the sterling dollar, given that it has a close configuration with the euro dollar, I will not have any strong conviction to maintain that bearish bias on the sterling dollar. It almost came close to our, in fact, it already, more or less hit the support level before I left on my 10 days break. So using 1.2460, 1.2440 as my short-term pivotal support for today on the sterling dollar, we will flip to a intraday bullish bias, potentially playing out that mean reversion rebound scenario as well. A breakout above 1.2615 will reinforce this potential short-term mean reversion rebound scenario for the sterling dollar, exposing the next near-term resistance at 1.2720. Only an hourly close below 1.2440 with an hourly close and breakdown below today's short-term pivotal support level at 1.2440, which is the lower limit, will invalidate today's intraday bullish bias looking up and resume its ongoing impulsive down move sequence on the sterling dollar to expose the next near-term support level at 1.2370, followed by 1.23 figure level, which is an important level. If you go to the daily chart over here, is in fact that V-shaped recovery of that low that has taken shape earlier this year on 22nd of April. Right, so that's for the intraday technical outlook on the sterling dollar using a 1.2470 slash 1.2440 as my short-term pivotal support level, potentially for a mean reversion rebound scenario to unfold. Now, turning our attention will be the Asia Pacific currency against the dollar, starting with the dollar yen over here. So the dollar yen, what we could see over here is that it starts to turn lethargic ever since last week over here, failure to actually went past uh 155.85 level and starts to trace a series of lower high over here. And the RSI also has been kept by a parallel descending trend line resistance as well. So with that, I'll be using 155.85 as my short-term pivotal resistance for today. Flip to a intraday bearish bias on the dollar yen. First support level to watch on the intermediate, on a near-term basis will be 15320. A breakdown below 15320 exposes the 200-day moving average, acting as a support zone, next support zone at 15214 slash 15130. Only an hourly close and a breakout above 155.85 short-term pivotal resistance will invalidate today's intraday bearish bias on the dollar yen to see a potential squeeze up for the next intermediate resistance zone to come in at 15770 slash 15385 level, which is this congestion area over here, 16th of July and 18th of July this year. Okay, so that's for the dollar yen, using 155.85 as my short-term pivotal resistance, and we will flip to a intraday bearish bias for today. Now, turning our attention will be the Aussie dollar. So the Aussie dollar appearance tends to be a much more tricky scenario given the fact that it do have a close relationship with the China benchmark stock indices and its proxy, the Hang Seng Index. So despite the fact that we may start to see a bit of dollar's strength pullback scenario unfolding in the FX market, I don't have a strong conviction to see a recovery in the Aussie dollar due to its kind of a correlation with this ongoing weakness that is being seen on the Hang Seng Index and the China benchmark stock indices. So with that, I will flip to a neutral bias today for the Aussie dollar. So neutral between 65 figure level and 64.10. And what is this 64.10 is very important. 64.10, if you go to the daily chart over here, in fact, 64.10 is actually the major ascending trend line support that I drew from the low of 13th of October 2022 that managed to survive in October 2023 and also managed to survive during the sell-off in 5th of August 2024, and now it's acting as a support level at 64.10. All right, so neutral between these two levels, 65 figure and 64.10, only push down with hourly close below 64.10, then potentially we may see a major bearish breakdown on the Aussie dollar, exposing the next near-term support level at 63.60 in the first step, followed by 63 figures slash 62.85 next. However, if price action starts to break out above 65 figure level, then potentially the Aussie dollar could shape that mean reversion rebound scenario in line with what we could potentially see in the euro dollar and the sterling dollar, exposing the next near-term resistance level at 65.45, followed by 66 figure next. So that's for the Aussie dollar, flipping to a neutral basis for today between 65 figure and 64.10. All right, now with that, let us now turn our attention to the major stock indices, starting with the Asia Pacific stock indices with the Hang Seng index or the Hong Kong 33. So price action tumbled and as expected and hit our support level at 19,080. So with that, I will use a Titan key short-term pivotal resistance for today on the Hong Kong 33 at this 19,480, which is the breakdown level that was seen on last Friday. As long as 19,480 Titan short-term pivotal resistance holds, potentially we will still maintain that intraday bearish bias on the Hong Kong 33 below 19,080 exposes the next near-term support level at 18,740 level over here. okay, which is the former minor swing high of 4th of June. However, if price action starts to have an hourly close and a breakout above the tightened short-term pivotal resistance at 19,480, today's intraday bearish buyers will be invalidated to see a kind of a mean reversion rebound, potentially exposing the next resistance, near-term resistance at 19,880, followed by 20,150, which correspond to the downward sloping 20-day moving average, and as well as the 50-day moving average, acting as a similar resistance zone level as well at 19,880 slash 20,150. Okay, so that's for the Hong Kong 33. Now, turning our attention will be the Japan 225. So for the Japan 225, it continues to trade within this complex sideways range configuration since the low of 27th of September. And recent rebound has managed to be constricted by this minor descending trend line that is in place since the high of 6th of November, and price action managed to get rejected yesterday and trade down much lower and below the 20-day and the 50-day and the 200-day moving average. So I'll be using this breakdown point here at 38,670 as my short-term pivotal resistance for today. As long as this resistance not surpassed the upside, we will have a intraday bearish bias on the Japan 225, i.e. the Nikkei 225, for it to expose the lower limit of this complex sideways range with near-term support level coming in at 37,765, which is the minor swing low of 15th of November and 21st of November. Below it exposes the medium-term complex sideways range support level at 37,390. Or that's in place since 27th of September this year. Only hourly close above at the breakout above 38,670 short-term pivotal resistance level would invalidate today's intraday bearish bias for it to potentially float up towards the upper limit of the complex range configuration. First resistance level to watch 39,090. Above it potentially exposes the next near-term resistance at 39,550. Okay, so that's for the Japan 225. Okay, what's up next for the German DAX or the German 30? So the German DAX and the also continues to trade in this kind of complex sideways range since the fresh all-time high on 17th of October at this 19,690 area. All right, it continues to trade in this kind of complex sideways range as it try to whipsaw around the 20-day and the 50-day moving average. So what I could see is that rebound that has taken shape on last Friday and Thursday managed to get rejected again on this minor descending trend line that I drew from the high of 29th of October. Tested one time, two time, three time, and this is the fourth test that it can't break above. And today's so no change, we'll be using this key resistance zone of at 19,510, 19,560, which is this two swing high over here that got rejected as my short-term pivotal resistance level for today. Flip to a intraday bearish bias on the German 30. First support level to watch will be right now today's Asia session low, which is also close to the 20-day moving average, and the 50-day moving average acting as a support at 19,250. Okay, let's put it in writing. 19,250 over here. Only a breakdown below 19,250 will kind of reinforce today's intraday bearish bias to expose the next near-term support level at 19,050, maximum 18,850, which is the lower limit of this complex sideways range configuration that is in place since the all-time high area of 19,690. However, if price action managed to push up above 19,560, then today's intraday bearish bias will be invalidated to potentially see a retest on the current all-time high area at 19,690 for the German DAX, i.e. the German 30. Right. Now, let us now take a closer look at the major US stock indices, starting with the US Wall Street 30, i.e. the Dow Jones Industrial Average. So the Dow Jones Industrial Average yesterday managed, initially before I went for my break, we have a bearish bias, and the bearish bias hit the support level, which is the 20-day moving average, and shaped that V-shaped recovery as intended, right? So this V-shaped recovery has already now come close to some support zone that we being defined by a Fibo extension level at 0.674 over here, taken from the low of 5th of November, project it to the high of 11th November, push it down to the low of 19th of November. And within this low of 19th of November, we do have a Fibo extension level as let me delete it again. A Fibo extension of 1 time as well. Okay, over here at 44,489, and also graphically it corresponds to this minor, or I would say medium term ascending channel that I drew from the low of 6th of August, the upper limit. All right, this light turquoise green line over here. Okay, let me put it up again so that you guys could expand it. All right, correspond to that Fibo extension level, Fibo extension level congestion area, acting as a resistance zone at 44,890 / 45,070, and also close to the upper limit of this medium term ascending channel over here in turquoise blue. And what's interesting over here is that the hourly RSI, if you look at the series of higher low that also being formed in line with that bullish reversal after hitting the 20-day moving average, it has also broken down below a parallel ascending trend line support level as well yesterday. So with this breaking down of this parallel ascending trend line support on the hourly RSI, that could see an increased risk of the US Wall Street 30 to shape at least a potential minor pullback scenario on the intraday basis. So with that, we will have a bearish bias for today for this potential minor pullback scenario to unfold. Whether this is a major top where we'll see potential multi-month decline at this juncture, not enough element for that. So the element that is only showing right now is only a potential intraday minor pullback or setback scenario on the US Wall Street 30 using 44,890 / 44,070 as my short-term pivotal resistance. A breakdown below yesterday US session low, which is at 44,520, which correspond also to the former minor swing high of 11 November, now turns into a pullback support, may expose the next near-term support zone of 43,980 / 43,807. And if you do the Fibo retracement of this last 5 wave up from the low of 19th of November all the way up to yesterday's high, that constitute, that will constitute the 50% to the 61% Fibo retracement. All right. However, with hourly close above 45,070, that means instead price action can't come down and continue to push up above 45,070. That would invalidate today's intraday bearish bias for that potential minor setback or pullback scenario to see the continuation of the impulsive up move towards the next resistance level as defined by Fibo extension level of 45,450, followed by 45,750. And graphically, if you look at the daily time frame chart, that would also constitute the upper limit of that major ascending trend line that was formed almost a year ago since the low of 31st of October 2023. So that's for the US Wall Street 30, potentially at risk of a minor setback or a minor pullback scenario below 44,890 / 45,070 short-term pivotal resistance for today. Now, turning our attention will be the US Nasdaq 100. So like I mentioned, the US Nasdaq 100 continues to be inflicted by the Trump trade where it underperformed against the Dow Jones and the Russell 2000, come make a fresh all-time high yesterday. Yesterday's push-up was being rejected by the Fibo retracement close to the 76.4 and the 61.8% Fibo retracement. So what we could see over here is that before I went for a break, we do have a bearish bias. It hit the support level and price action continues to trade higher. And yesterday it got rejected at the 50%, at 61% and the 76.4% Fibo retracement, which I drew earlier on. So I'll be using 20,990 as my short-term pivotal resistance for today. That was rejected yesterday as well. That will be my pivotal resistance, bearish bias for today. Potentially near-term support level will be at the 20-day moving average, acting as intermediate support at 20,640. A breakdown below it may expose last 2 weeks of minor swing low area at 20,460 / 20,335. We also correspond to correspond to the rising 50-day moving average as well, acting as a similar resistance support level. All right, so I repeat, 20,990 short-term pivotal resistance for the Nasdaq 100, bearish bias for today. First support level 20,640, a breakdown below it potentially exposes 20,460/335. However, if price action managed to have an hourly close above 20,990, today's intraday bearish bias will be invalidated for a potential recovery to revisit the current all-time high area at 21,220. Above it potentially sees 21,390, which is defined by a Fibo extension level as well. Now that sum up the intraday technical outlook on the major stock indices. So now let us concentrate our attention on the commodities market, starting with gold XAU/USD. So for gold XAU/USD, what we could see over here is that there's this before I went for a break, for my 10 days of break, we have a bearish bias. So the bearish bias hit the first support zone of 2546/526 before shaping that kind of V-shaped recovery. Then this V-shaped recovery was due to a heightened geopolitical political risk premium due to the fact that Ukraine is being allowed to use a long-range missile from US to attack Russia assets. All right, so that causes the gold price to actually rally. And yesterday, gold price actually tumbled due to this geopolitical risk premium that's being diminished, not between Russia and Ukraine, but more between this Israel and Hezbollah, okay, in the Middle East region. So what I could see over here is that the push down managed to actually see the RSI hitting its oversold zone, and now it's has really exited from the oversold zone. And what's interesting over here is that this push down has also reached the golden ratio and the 76.4% Fibo retracement of that previous V-shaped rally. All right, over here. So with that, I'll be using this 2,600, 2,590 as my short-term pivotal risk support level for today on gold XAU/USD. At least on a shorter term basis, we will flip to an intraday bullish bias for today. First near-term resistance level to watch will be 2,650/660. Above it potentially may re-expose Monday's high area, Monday's high level at 2,690. All right, then from here we see how the price of gold goes from this level, because there could be still a risk for it to actually revisit the 2,506, 2,005 level. Right, but at least from a intraday basis, potentially given that the RSI is being oversold, there could be some signs of a potential push up to retrace a certain portion of that sell off that has taken shape on yesterday. All right, using 2,600/2,590 as my short-term pivotal support level, flip to a intraday bullish bias. Resistance level to watch for today, 2,650/660. Above it, the next resistance level on a near-term basis will be 2,689. However, if price action starts to have an hourly close and a breakdown below 2,590, then this multi-week medium-term corrective decline move since the all-time high of end of October may resume to revisit the support zone of 2,546/2,526 and even 2,507/2,500. Okay, so that's for gold XAU/USD. Now, lastly will be the West Texas crude oil. So I did mention the West Texas crude oil yesterday failed to recapture the $71 per barrel and managed to get the rejection again of the 50-day moving average, acting as a resistance level. So with that, the hourly RSI is now oversold. So potentially there could be some form of minor bounce. So this minor bounce may retrace back to the pullback line here of this former minor ascending trend line, former minor ascending channel, now turned into a pullback resistance at 70.80. So I'll be using a 70.80 as my short-term pivotal resistance to look out for this potential minor snapback rally. As long as this snapback rally didn't surpass 70.80 short-term pivotal resistance on West Texas crude oil, we will still maintain that intraday bearish bias. Support level to watch still remains unchanged at 67.55/10. maximum 65.70. So what's 65.70? If you look at the daily time frame chart of the West Texas crude oil, 65.70 is in fact the key medium term pivotal support level of this ongoing major ascending descending triangle range configuration, pardon me, descending triangle range configuration that is in place since last year 20th of March 2023 low. All right, over here only hourly close above 70.80 will negate today's intraday bearish bias to see a potential push up to revisit 71.80 followed by 73.15 next on West Texas crude oil. All right, so that sum up the intraday technical outlook on the major cross asset classes. So before we end today's daily dose, let's have a quick look at the economic calendar. What are the key economic data to look out for today? Right, so today will be Tuesday, so a rather quiet session in the European session. Not much news to actually take note of. When it comes to the US session, two key data to look out for that could potentially move the cross asset classes, which will be the housing price index for the month of September out at 10 p.m. Singapore time, followed by a conference board consumer confidence data out at 11 p.m. Singapore time. All right, and today there is no Federal Reserve official speaking for today. And what we could see over here is, yes, one more thing that's important is during 3 a.m. Singapore time, there will be the release of the FOMC minutes, all right, that could potentially see some kind of debate between the US Federal Reserve officials on their upcoming interest rate decision, whether do they place much emphasis of Trump upcoming policy. All right, so boss, right now market is only looking at potentially two interest rate cut in 2025. Okay, and we see how the debate unfold during the minutes. Okay, that's going to be out at 3 a.m. Singapore time tomorrow, and also in tomorrow early Asia session at 8:30 a.m. Singapore time, that could potentially impact the Aussie dollar and the Aussie cross pair will be the monthly CPI indicator for Australia for the month of October, and market is expecting a slight uptick of 2 basis point increase from previous month of September of 2.1% to slightly increase to 2.3%. And for those who are looking at the Kiwi dollar, we also have the RBNZ interest rate decision at 9 a.m. Singapore time tomorrow, followed by 10 a.m. the RBNZ press conference. All right. So with that, that sum up today's daily dose of market insights. I'm Kelvin here, signing off, and wish you all a great day ahead. And we shall speak again tomorrow. Thank you.